Hey, what's up, YouTube? This is Martin Day Trades, and today we're gonna go over the NAS100 weekly market outlook, and we're gonna see what we can analyze from historical data to give us an idea of where price lies right now, highs, lows, on a weekly time frame, monthly time frame, and daily time frame to kind of get an area of where the trend is, where could trend reverse, where can trend continue. And see how we can have an overall bias for either a bullish move or a bearish move. We'll give both scenarios, and depending on how the week starts to play out will depend on how those scenarios play out. So let's go ahead and get to the charts. So here, guys, we have NAS100. This last day's move caught this buy here, 3.75%. It was a good entry. There was this order block, the fib 79%. Caught this move going up. This order block right here, this fib came down to the 79%, just a fib and order block below the 12 a.m. open. Buy down here, 25 pip stop loss, had that good analysis. So with that being said, we're gonna go to the weekly chart. I'm still looking to get in on there, but let's see. Weekly. We have the daily. Weekly low was this one right here, but now this is now the weekly low. Keep that there. We're on a day, so we can technically keep it about right there. We have the weekly high, which is the last 5 days. 1, 2, 3, 4, 5. The high was right here, so we can move this to this high right here. And if we go to the weekly chart, we can see how that lines up. Weekly high, weekly low. And I have here my twin brother Joe. He's interested in trading. He's been trading for a while. He watches Fear of Being Averages, FBA Capital's videos too, and mine. So he's been taking trades with 25 pip stop losses, and he's been actually making a lot better risk reward, which I'm gonna have a video up on how to backtesting a whole week's worth of information, but using 25 pip stop loss to see what those pips add up to. So now that we have this weekly chart up, we're gonna zoom out. Okay, so we just took these lows out right here. This low right here went under it, so we can know that it's looking to grab something, some liquidity before a move up. But for the higher trend, it still needs to come down. We have this move right here where I thought it was gonna reject off of, but we're just gonna pull that down, this fib, to this new low, and see where price could retrace. Now I have it from this high to this low, but technically we could have it from this area from right here as well, from this high to this low, because there was the downward move, then the expansion up for another downward move. So you guys see this right here, and which lines up with this order block right here on a weekly time frame. The last up candle before the down move. Okay. And that's actually a very strong weekly bearish order block. The 79% fib is right here, lines up with the 12,500. So if I'm gonna be going short long term, or looking for an area to target, if I'm going for a long, I'm gonna look to take this up to the top side and take liquidity all the way up here, because there's liquidity. So we can take it up here, maybe exit out at the 70% middle of this order block, right before it gets to 12,500, about 180 pips before that. But that's the the safe part of taking out if we catch a buy from down here. Now it is at the 11,000 big figure level. which means it could just range and then just start to reject that. But how far could that be? Right, that's a good question. We have this 79%, this 30%. We have a 30% fib right here, and we actually, now that I'm a little bit closer in on a weekly time frame, what is that? What is this? This like, but there's a wicks. Wait, what do I see? I see a fair value gap. This area right there. It's a week. We're probably extending it out a month, but I see that there. Fair value gap, so we don't get confused. Just gonna mark that. This one right here, I'm actually gonna delete that. Fair value gap. There's that one down there. I'm gonna delete this. Clear up some of the clutter. Sorry about this, guys. Okay, so we have our weekly high, weekly low. Let's go down to the daily chart, and we're gonna move our daily high to this previous day high, previous day low. Previous day low, we're just gonna move to the weekly low, overlap them. Okay, now I'm gonna go down to the 30-minute, and what I'm gonna do is Asian session is gonna start pretty soon, so what I'm gonna do is just kind of mark this out. Asian session high, I don't know, I'm just gonna kind of put these in this area. Whenever this Asian session starts to play out, I'll just move the high low and the 12 a.m. open. 12 a.m. open. Ooh, landed right on that seat. 00 is 12 a.m. open. Yeah, perfect. Okay, so we'll see where 12 a.m. open is for the new day, and from there we can start getting better analysis. Previous day high, let's go like this. Previous day low, there. Just to clean up the charts a little bit, guys. Go like that. Oh no. Okay. Okay, so we had this move that played out right here, came down, rejected this, so this fib is no longer valid. I'm gonna delete that. So right now we're just looking at, you know, this. Oh, look, I had it right here. Let's move it down to where it needs to be, and we can see where price can go now. On a 30-minute time frame, there's this move that happened, had a retracement. Let's see what happens. Went to the 50%, and then it had its, you know, major fall. Now, with that being said, let's move this fib to this high, to this low. Now, because that's the most recent impulse, so we'll just extend it out. Okay, so weekly market outlook, we know that on a weekly chart it's been falling, so it needs a pullback of some sort, right? But we're gonna wait for that and trade with the trend because we don't know how low this is gonna go. So let's see. Yes, we know that it's been hitting off order blocks. And Joe, where in this area would you say the order block would be? Maybe let's go down a month, make sure it's right here. Which one would that be?
You see this top of the wick right here on this candle, and then the wick right there. I would put that as a
Order block, not a fair value block. Fair value gap.
oh, then it's
This one.
coming down, right?
Okay.
Move up.
Yes, perfect. So we got this right here, and we saw that it ran through. Let's see if a weekly candle goes a little lower. Actually, there's this last down candle before the move up, but that's very small. We can, in fact, do this and see if it lines up. No, just the body. Yeah, unless I go to a daily and the body looks a little bit fresher on the daily. The last down candle before the move up. Yeah, it would be this one right here. Last down candle before the move up. So this was literally the last down candle. And then from there, everything started to come up. I had a retest and then came this way. So now we see it's in the middle of this order block rejecting the 11,000. There might be a rejection at this level. Just took the lows out. There's grabbed liquidity. We could be long here. So we'll see how Asia and London play out, because if they play out bullish, let's say they do something like start to come up this way, Asia, and then London has its thing, and then New York has a little fall. Well, in that fall, we're looking for a smart place to take that retracement, the discount. So depending on what happens, because we may not take a trade on Monday. If this continues to kind of like Asia trades like this and it kind of falls, yeah, it's like a continuation move. And then we just have to wait for some type of like support. Down to 4 hours, not enough. Nope, daily, not bad. Okay, so here we go. Where could it fall to? Well, I'm gonna have to go to weekly actually, guys. Yeah, the weekly's a lot more clear. Now, I do have, since it's breaking through these areas right here, it's now gonna have to either go to two places that I see. We know that there's breaker blocks, meaning that's the last candle going up got ran through this one right here. The last up candle came back down, got ran through, became a wonder if I have it marked out on the daily. That's what it has. I have it out marked out. No, it's gonna have to be the monthly, I think. I already messaged. Okay. Sorry about that, guys. I don't know how I have my order block right here. That might be on a 4 hour or something, but I see it right here on a daily, right here on a monthly. This is a monthly chart. We could go to the weekly. Okay, so this last up candle before the move down got ran through, turning it into a breaker block. So at some point it's gonna have to come retest it. Same with this. There was this last up candle, ran through it, was a breaker block at one point, was rejecting these areas over here, and then came through it. So what we can see here is that there's actually a breaker block, but right next to it is an order block. The breaker block is this part right here, the area in price where it got ran through, and then it's gonna have to either come and test that breaker block. It may come down to like close to the 70% and then take off, or it's gonna come down, catch support on this monthly bullish order block. Monthly bullish order block. See, I get this for you guys. Okay, and then we'll have its moved back up to all-time highs, or it may range for a while. It may range, but what I have here is a bigger time frame fib that I drew from this low to this high, and I was just curious, like, where could price go? And there's this 79% fib level here, a lot of consolidation. We know that there's an order block in here somewhere. I don't want to zoom in, but that lines up on a higher time frame. Could come down, take all this liquidity. That's what, the markets do is, they sell off and people are fearful, and then institutions step in at certain price points and just have faith that everyone else is going to do it. And all these Americans lost a lot of their wealth from selling and with losses, and there's people buying it up, right, Joe? So those are my 3 targets right here. So you got this breaker block, 1 month bullish order block, and then down here, and then we have, so there's a lot of areas where price could come down and tag, but all up in this area there's going to be a battle. So there's going to be retracements. May come back to the top side, come back down and downside. It may range for months, could be years, whatever. But as soon as that as soon as these highs start get taken out, there's going to be a lot of FOMO, and we don't know how high it'll go. It might go to 50K, might go to 50K. The people are looking for, getting in at 17,000, 16,000, maybe go to 40K, who knows. But as of right now, guys, this is my weekly market outlook, 30-minute chart. Looking good, guys. We have an area of high confluence, Joe, that we can know. 12 a.m. open. It could be anywhere around this area. Just don't know. But we do have a fib from previous day's high to low. So if price does start to come up, we can take an entry at the 79%. We know that there's a 1 hour bearish order block right here between the 62 and 79%. We'll take it at the 79%. Big figure levels at 12,200 or 11,200. Sniper entries 11,226, and I think on FTMO MetaTrader, my pips, they're 10 pips off from what the charts are, so I'll be putting 11,236 maybe on MetaTrader instead of 226 because it's 10 points discrepancy. But yeah, no trades unless it smacks it. Sell limit order. It's Monday, so even if we don't take a trade on Monday, it's not gonna be the end of us. Volume comes in heavy Tuesday, Wednesday, and Thursday. So with that being said, this is my twin brother Joe. He's aspiring day trader just like I am. He's been in demo account now, Joe, for how many weeks?
I've been doing it for 2 months, but these last 2 weeks I restarted my demo account because I'm switching up the lot sizes. I was doing 2 and 4 lot, but in order to pass the FTMO challenge, you need to make 10% in 1 month. And just when you have two lot for most of your trades, you win some, you lose some. At the end of the week, you're supposed to be, if you have good risk management, you're supposed to be, profitable by 2-3% on a lower account. But if you have your risk to reward, if you have a higher lot size, and if you're only risking 25 pips to make 25 pips, and usually the move happens at around 100 to 150 pips, that's 4%. So you're risking 25 pips to make 100 or 150 pips. So I've been trying that out, and I'm up 12% in 2 weeks. So I made about 6% each week on average, and that's way better than making the about the 1.8 to 2% when I was previously doing when I started about 2 weeks ago.
Makes sense.
Because there's just no way I'm going to pass the FTMO when you have such small lot sizes like that. You could if it runs 200, 300 pips, but realistically, as the type of day trader I am, 1 hour max it in the market. I will probably have a little runner to run for the rest of the day, but 1 hour max is it. I don't want to be in it and start, watching the market just to try to get 300 pips to make what is it? 300 pips on 2 lot is what?
300 pips on 2 lots. 2 lots is thousand
Or even $4.
$1,000 for 100 pips.
So
No, 50 pips is your risk. 2 lots, that's 1,000 on a 100K account. So every 50 pips is $1,000.
so if you're risking 50 pips to make 300, then that's every 50 pips is 1%. So to or six so 6% on 300 pips when you could make 6% on 150 pips, which we've been testing out. Usually the move happens between 100 and 150 within the first hour. So I mean, I'd rather work for 1 hour instead of waiting the whole day for it to finally get to the 6% when I can just work for 1 hour and get to the 6%.
Yeah, and that makes perfect sense. And that was an aha moment for me because I've been trading 50 pip uh, every trade as my risk. But Joe had noticed that there was some trades where it'd be going 5 pips drawdown, 4 pips drawdown, but maybe about 15, 20 pips drawdown for
Never more than 20 pips.
never more than really 20 pips. So if we can have a 25 pip stop loss, this trade idea where it could come down and you know take this liquidity from 12,200, get in at the 12, this entry right here could come down and really tap this because this might turn into a order block down here. So it could come down and tap this 11,000 big figure level to the pip most of the times, or even if let's say 15. This is this is a 1 to not 8.5 risk to reward, and if I kept it at the 50 pip stop loss, this is a 1 to 4 risk to reward. But if we're looking for other targets to take out at, it could be right at the 11,100, which is only a 1 to 2.5 risk to reward with the 50 pip stop loss. But with a 25 pip stop loss, this same trade idea, by getting in at the optimal trade entry to reduce that amount of drawdown, now turns into a 1 to 5.18 risk to reward, which if you win this trade, instead of being able to lose 2.5 days, you were now able to lose 5 days in a row. So that's what the risk to reward is so important, and I'm glad my twin brother kind of explained it to me. He had been analyzing the way I've been trading, and it makes sense. So I want to do some back testing, and when I back test, it's going to be 25 pips max stop losses for sniper entries, and see how much pips we can accumulate by the end of the week. I still probably won't take out my move my stop loss to break even until it gets to 50 pips in profit, just so that I know it's moving in the right direction. With that being said, guys, this is Martin Day Trades, my twin brother Joseph. We're here at the weekly market outlook, and if you guys can like, comment, subscribe, that would be awesome. Have a good weekend, guys. Be responsible, be disciplined, and trade correctly.